Let's move to discuss straight line depreciation method in details. This method spreads the cost of the fixed asset evenly over its useful life. It is also known as original cost method, fixed installment method, and fixed percentage method. When we will subtract cost less residual value divided by useful life. You may use another formula, cost less residual value multiply by rate of depreciation. The rate of depreciation is equal to 1 over useful life multiply by 100. Let me explain this formula with the help of an example. Let's say a equipment value is $16,000, useful life 4 year and residual value $4,000. We will calculate the depreciation with the help of straight line depreciation method. It is equal to cost less residual value divided by useful life. When we subtract the cost $16,000 from residual value $4,000 and divided the useful life 4 years, we got $3,000 depreciation expense per year. If we will use another formula for the calculation of the straight line depreciation, we will get the same results. Here first we need to calculate depreciation rate. If we will divide 1 by useful life then multiply by 100%, we will get depreciation rate. In this example, we have useful life 4 years. We will divide 1 by 4 multiply by 100%. We get 25% depreciation rate. Next step, you will multiply depreciation rate with cost less residual value. Here cost is $16,000 less residual value $4,000 multiply depreciation rate 20%. We get $3,000 per year depreciation expense. You must note that both methods have the same answer. You must note these both formulas, don't depend on only one formula only. It will really help during exam time. Now I am going to explain straight line depreciation schedule to you. In the depreciation schedule, there must be 4 columns. First one is the year, second is the depreciation expense, third for accumulated depreciation, and fourth, as per our previous calculations, we have got $3,000 depreciation expense for each year. In the beginning of the year, the book value of the assets is equal to $16,000. In year 1, depreciation expense will $3,000 and accumulated depreciation expense also $3,000. But the book value becomes $13,000. We know that book value is equal to the cost of assets less accumulated depreciation. Here the cost of assets is $16,000 and accumulated depreciation in the year is equal to $3,000. So, the book value in year 1 is $16,000 less $3,000 equal $13,000. Similarly, depreciation expense rest of the year will equal to $3,000. Due to this reason, we will say this method straight line depreciation method. But the accumulated depreciation and book value of the assets will change each year. In accumulated depreciation will increase each year by $3,000. The book value will reduce by $3,000 each year. Similarly, depreciation expense rest of the year will equal to $3,000. Due to this reason, we will say this method straight line depreciation method. But the accumulated depreciation and book value of the assets will change each year. In accumulated depreciation will increase each year by $3,000. The book value will reduce by $3,000. Here you must note an important point, last year book value must equal to residual value. In this case, the residual value is equal to $4,000 and book value must equal to $4,000. So, it is correctly solved. If we will need to calculate depreciation per month, it is so simple. We just divide per year depreciation by 12. In our example, depreciation for the year $3,000. If we will divide $3,000 by 12 then get $250 per month depreciation. If we will need depreciation for 3 months only, then we will just per month depreciation multiply by 3. We will get $750 depreciation. We will make the straight line depreciation journal entry as follows. Depreciation expense equipment debit $3,000. Accumulated depreciation equipment credit $3,000. Here the depreciation expense account will go to income statement. It will deduct from a sale to get profit. On the other hand, accumulated depreciation account will go to balance sheet to reduce the cost of assets. Because accumulated depreciation is a contra asset account. Let me show you effect of these accounts in financial statements. First, we will look at income statements. Second, we will look in the balance sheet. Another important point, you must note in about depreciation expense. It will add in statement of cash flows under indirect method, because it is not a physically flow cash. It is just recording to match the expense matching principle. Fortunately, straight line depreciation method have the advantages as well. 1. Simple and easy to understand. 2. The book value of an asset can be reduced to 0. 3. A fair evaluation of an asset each year in the balance sheet. Now, we had understood depreciation straight line method. Please subscribe your Accounting Plus channel and thumb up this video and share with your friends as well. If you need additional help, then you will ask your questions in comments below. Thank you.